Hello, beautiful people. It's Wednesday, and we're setting the stage for the first debate. So, happy midweek. It's time for your midweek update on current trades we have, and let's just take some peeks at the market. We'll see what we're looking at here. So, it's John, your stay at home designer. Thanks for stopping by. You came to the right place where my passion is to help you pursue your passions. So, let's get into it. Today we're looking at, let's look at general market SPY here. So you can see support line has held. We've kind of bounced off of it. You will note, I think when I was looking at all the charts today for basically indexes and other stocks that are pretty representative, it seemed like the 50-day moving average was quite a resistance level that we'll have to contend with. So I did anticipate this a little bit when we were shooting below it. So let's see how we look in the coming days. None of us really know what direction exactly we go into, but we can always look at some notable scenarios, notable levels, and kind of figure out what is our best risk reward trades or moves based on that. So unfortunately, no opening trades lately. It's been kind of quiet on my account end. A few big reasons. One, there hasn't been a lot of good premium out there in terms of options trades. So I'll kind of delve into that a little further. And then also the other one, number two, is the timeline. There's a lot of weird timing when we get into basically September, October. You have like these triple witching dates for options, dividends, etc. And then like the next further out expiration is kind of far away, so it kind of creates this weird void that we deal with. So that's the quick of it, but I can discuss that later at the end. So SPY, that's the only real notable. Let's go to the Qs really quick. NASDAQ, we are actually above the 50-day moving average, so that is a good sign, relatively speaking. You also note, maybe we're looking at potential support here, like the 268 level, 269. So there's kind of two main supports we can maybe utilize here. So that's why I'm sort of neutral. I like where we're at in general. Let's look at the diamonds though. No. Okay, let's get out of that. Next one though, let's go to IWM. That one's pretty important here too. And you'll note with IWM, it's probably the weakest of the bunch. We have our resistance line here at 160, and we're under the 50-day moving average. So we're just kind of a lot of overhead supply that we got to contend with. And we are also sort of wedged in between the 200-day moving average here, which is like this gray bar. Volume's kind of quiet, nothing too crazy, nothing too notable. From a trend line standpoint, we will see. We're at a point where maybe this breaks into another trend line where this is kind of the low of that line at the 141 level. But it's hard to say. We'll see as more time goes by. All right, so let's go to trades. I got about 5 positions here that are on. Apple's one of the first ones. And with Apple, I'm sitting in a great position right now. My short strike here is at 105, so we are away from that. I was actually in the money the last about week or so ago, but I wasn't too concerned, honestly. A few of my trades went in the money, and they were being a little bit challenged, but I wasn't too worried. I figured I'd give it some time to move back, and if we were getting closer to expiration, then I would come up with next moves there. But other than that, I felt pretty confident on the whole. So looking good so far. My actual break even is going to be at 104.92. So we've got some space, some room to run, and we will just have to see. Actually, it's 103.92. My apologies there. So basically, we need to break past these lows again in order to lose on this trade. So looking pretty solid. Adobe, another one. This one's been kind of volatile. When we entered this trade, it was back in August. It felt pretty good about where it was sitting. And then we peaked at 536. and ended up actually breaking below our short strike at 475. So we spent a few days and weeks below this level. Same as Apple though, it wasn't too concerned. You can see we've been closing above the 50-day moving average, and it seems to be holding as a nice support. So not too concerned there. We're also well above our break-even point at 473.50. So really good, looking solid. I'm looking to probably be closing this out. I don't think this week, but it seems like if things stay above our short strike, next week we'll close out at that 50% profit. All right, let's see. AMD, my next one too. Same old with the correction. Our strike here was at $80, and we were well below it, but now we're above 50-day moving average and looking good. So I think this will end up becoming profitable too. And if it doesn't, we'll just make our adjustments and moves as we need to. So I'm not too worried. Gold, another big one. Now, this gets tricky. With gold, I'm a fan. I like what gold is doing. I'm okay with aspects of how it's correcting, and I'm okay trading it long-term and short-term. So my short strike actually was at 176 with the 174 protection, and our break-even was at 175.42. So we were actually well below that break-even point last week, and we're now trending above it. We've got some room to run, but this one probably could get challenged again. It really just depends on how we're looking. You'll note, a little bit of overhead supply here we got to overcome. There is some kind of geopolitical situations going on too, but at the same time, that could also be what makes gold somewhat a good trade, more valuable in the future. So Tesla, this is the one. Biggest position so far. Traded around Battery Day, had some success, and actually still looking to continue. I still have an open iron condor on this trade. We took in a net credit return here. Our received credit is impressive, $656 on a 10 wide. So we're basically looking at, if this goes really poorly, we would be looking at $340 max loss. But that's really good for this type of setup. So I'm not worried because, one, we're already sitting profitable. I'm at about, of that 656, we're at $150 a profit right now. I'm gonna let that ride for a little bit. Biggest concern for sure is, I don't remember the exact date, I'll have to look this up, but it is, I think next week or the week after, Tesla will announce their vehicles delivered, and usually everyone infers on that. It's kind of like the same way Apple used to say how many iPhones they sold in the quarter, a little bit before their actual announcement of their quarterly results. So that can sometimes be a leading indicator, but nonetheless it could lead to volatility, which I sort of don't want at this point in time. Right now, since I sort of took this in while it had volatility, my short strikes are sitting at the 470 level. So I'm a little bit up here, and these are some calls I sold. Boom. And then I've also sold here at the 382 level, and we've got our break evens basically at 476 and change, and then we're looking at 375 and a little bit of change here for our break even on the low. So we want to basically be inside of this range in order to pocket majority or all of that premium. So far looking good, not too bad. I'm okay in terms of how Tesla's looking. But like we said, this could always change on a dime. Next big move I'm considering, or at least looking at, and it's kind of twofold, is EWZ. Now, let's see. How about I give it a longer timeline just to show you. So I'm a fan of seeing how EWZ has a lot of overhead supply here. You'll see sort of this tranche up here in the 45s, 50s. Okay, there's a lot. We got price gaps up the wazoo. So every time we hit these price gaps, generally speaking, you have a chance for a reversal. So we're sitting here at 42.20. We got 34.80. and we've got all these lows that were hit as extremes in between. So the reason I'm seeing this and a downward trend, 50-day moving average well below it, I mean, everything points to negativity. So I could see an easy possibility for us to get back down to the 20s, 6-7 point move down. So this is something I'm considering. I just got to look more at how this trades throughout the week. But that would be my next closest trade that I'm seeing. Other than that, I'm actually just really staying kind of patient. I'm waiting for more volatility to kick in before I feel confident adding on more risk. So I have about as much risk as I'm comfortable with, and I'm really just trading with about 15% of the account right now, so I'm pretty light. And we will see how that goes. Here's the VIX. Nothing too notable, but you'll just see we keep getting these spikes every about 3 months or so. So we'll see. This next big spike is actually going to be in November. So that, maybe that's foreshadowing, maybe it's not because everyone's anticipating it. But that will be the next biggest move. Other than that, I think I'm going to start focusing more on some design videos. I've been putting those off to manage where the opportunity is, which has been trading at the moment. But if it stays slow and I'm just waiting for more opportunities to pick up, I'll kind of start doing more mixes of that. So let me know what you think. I'm curious what trades you're looking at currently. And it's time to get outside. There's no wind, no smoke. Time to enjoy the rest of the day. So I suggest everyone does the same. Go say hi to your family or friends. I don't know. But nonetheless, I will see you on the next one. Thanks for stopping by. Don't forget to hit the like and subscribe. We want to get this out to people, help them out. And I appreciate you. I'll see you on the next one for a late week update. Thank you. Bye-bye.